Let me record this. All right, so today we'll have a very quick session, and it was rather I would have had this meeting yesterday, so my God, couldn't have that. Sorry about that. So in one of the recent meetings, we did talk about when we were back testing, and one of the reasons why you must take back testing and forward testing as part of your um, daily routine is because it increases your confidence, because you must have seen a pattern happening over and over and over. So you train your eyes to seeing one pattern, which will become your truth, right? And until you do that to have a level of confidence, you shouldn't really face the market, because it's a dynamic market and the mind tends to forget. All right. So in one of the last meeting, we did talk about flip zones when we're trying to back test or forward test code. How we said it's more like a breaker block. So you have a wick right here, and the price breaks it aggressively and into the downside. You extend that flip zone or breaker block, expecting price to get there and drop off from there. All right. Now, there are many ways to buy or sell in the market, but one of the things you forward test for is to see the parts that resonates with you. So I have more than 10 entries, model, or things I look at for, but because I have that, so because of my level of experience and the number of years I've spent doing this over and over again. However, as a starter, as a beginner, or as a trader who's trying to find his edge, you don't need to know all of the plenty stuff. All right. So, however, in our meetings, our trainings, I will try my best to give you a couple of things, right? So, your own is that when you forward test or back test, whatever you want to call it, you will come up with, there are some that will make more sense to you than the other. And I do always say, stick to that one. You don't need 3 entry models, you don't need 5 entry models, you don't need one, and follow it. So all you need is one model. All you need is one model. We have a couple of them we have talked about in the YouTube channel. We talk about the breaker block model where price breaks X. You can just wait for those powerful breaks and expect price to pull back to the breaker block, and you enter from there. All right. We have also talked about the type 1s and the type 2s. Type 1s where in a bullish market, you wait for this movement of price to come back here, then you are buying from this level. All right, I do this entry model a lot. And then we talk about another one today. All right, I'm going to give you another entry model today, and we may most likely for test with this entry model. All right, I kind of like this one a whole lot. And there's what the older traders or fundamental traders would call shoulder head and shoulder entry model. All right, so I will kind of give us a thought. All right. And if I talk about the model, let me give you guys a bit of thought. So when you understand structure very well, all right, you understand structure, and in any time frame, any context, the next thing you want to look at for is liquidity. All right. And then you want to now look at for your POIs, point of interest for your entries. So POIs may not be entries. POIs may be from a higher time frame, maybe an hourly time frame. You expect price to get to a particular area, and then you buy or sell. And what marks out our POIs, of course, your order blocks, your fair value gap, and then your liquidity pool, and then of course your breaker block. So these are all references of price that marks or makes your POI. So inside your POI, from the 1 hour time frame, once price approaches your POIs, that is an order block, a fair value gap, liquidity pool, a breaker block, you now scale down to smaller time frame to get an entry, and that will actually help you reduce your stop loss and all of the other good stuff. All right. Okay. So, but then the way you get your POI is also the way you get your entry. So I can get an area of POI simply because I am trading off a breaker block. So I'm expecting this area to be my POI in 1 hour. And then price approaches this, and I go to 5 minutes, and that gives another expansion. I can also see another breaker block inside the 5 minutes where price can pull back to I am buying from. You understand that? So you can have POIs and entries. They can happen interchangeably. So you just need to know what you are waiting for. So again, structure, liquidity, POI, and then your entry. all right? Structure, liquidity, PY. So you must really have a good grasp of structure. Once every while, price will come hit you, that's fine. That's why your rules of entry and exit must be fixed. The expectation must be flexible. So entry of any trade is always at least 1:3. So I'm not taking a trade if it's not having a potential of giving me to 3. All right. And because I am now trading, because of all the psychological hack we have been having since the year began, we are trading with respect to a set of numbers, not individual trade. So this is a new week that is before us. If you are going to trade 10 times, document or journal every 10 trades. If you have not done your EOW end of week for last week, as at now, then you're actually wrong. So the errors you made last week that pained you, you are most likely going to repeat them this new week. Why it is not journal? Why you not take time to go back and look at them? You see why journaling is a must. So if you treat this as a hobby, if trading is a hobby to you, then you're not going to amount to anything much. How many hobbies have you amounted to something much in your life? Singing is your hobby. You're not part of any singing crew, so it's just a hobby. So you are just an average singer. You see that? But if you make it a profession, this is what I do as a career path, then you will not be treating your career the way most of us are teaching it. For example, you want to be an engineer and trading and engineering is your career. For example, you go to school, write exams, do all of the notes because you want to amount to something more as an engineer. So also, if trading is not to you a career, or you're not looking at it as something you have to pay your attention to full time, all right, then you keep on treating it with levity like most of you are doing already. No, what's it called? No journal, no record. If you lose a trade or whatever, you just allow the pain, you soak it in, you want to bounce back. What did you learn from that loss? And it's not enough. The brain is fickle. I can say that like a million times. Most of you are aware there's anything that pains you in your life, but then you just swallowed it and moved on, only for you to face similar stuff in the next couple of months or years down the line. And because you didn't learn from the previous time, so it's going to repeat itself. And if you don't learn from history, we are bound to repeat the failure. If you don't learn from history, you are bound to repeat the failure. Now, that does not mean even if you journal, you're not still going to hit. But then you have ways to know that this is where my setup work. Our setup, or every setup, work within a perimeter of market condition. Have you discovered what condition your setup is high probable? What can you call a high probable setup for you? What is a high probable setup? So these are the things that you have to start considering. I am not doing a whole lot in January because the year just started, even though we are already in 21st date. But then you must have some things you must set in order for you to run with the rest of the year. If you put in some of the work we are talking about, I guarantee you, what you're going to achieve from this space in 3 months will outweigh all the sufferings you've gone through for the past 5 years, 4 years, 3 years as a trader. I'm telling you the fact. And you like, when the profits start coming, like, where has all the sorrows will disappear? But the joy you expect is at the other side of the work, it's at the other side of journaling, it's at the other side of putting to practice what you are learning. And I will keep saying this because this is the truth. This is the truth. This past week, I have studied cumulatively over 10 hours. Most of you haven't done 30 minutes. And you want to amount to something more. I learned something on Cristiano Ronaldo, being the first as a trader. Oh, sorry, I said trader. He will be the first as a footballer to get to the training center and will be the last to leave, even though he has had, as of now, 5 Ballon d'Or, right? And all of those stuff. So success leaves clues, guys. It leaves clues. I recently, in the last class, I gave us a number. Probably most of you already have. Somebody talk about tester. Whatever you can handle to help you succeed, please do that. All right. Again, I gave us a number to chat up for TradingView Pro. I'm not talking about that here. I gave us a free whatever, gocharting.com, right? Whatever will help you forward test, back test, get it. The work, like somebody posted in the group, is more of patience and waiting. And the patience and waiting is not wasting time. When you spend time like we're having now to look at the market condition, you are going to amount to a whole lot. Okay. So, and also the group, I don't breed lazy students. All right. So most of the time when I shut up the group, close the group for many chats, is because I'm not, the work is for you to do. It's not for you to sit wherever you are and then wait for setup. In fact, anybody that drops setup, it's not for you to rush to go and trade, no matter who shares, even if it's me. Go and analyze and trade your conviction. Trade your conviction. I was sharing a thought that we are trading with set, not individual trades. So the coming week, you want to trade, for example, 10 times. And for these 10 times, if you can get 3 right, and let's say the 7 is wrong, do you know you still make profit at the end of the week? Trading with 1:3. So you see where the problem is coming from. The problem is not that you are waiting for 7/10 win for you to know you are now a guru. You are not a guru, or you're waiting for 9/10. I don't subscribe to that. All right. And that is where psychology comes in. This is a game of like a casino. It's even worse than sporty bets and the other stuff. Those that do sports bets and all of it. Trading is even worse. Like you read from the trading in the zone course, right? Mark Douglas said it clearly, and there's no cleaner way to say that, right? Where you have in the sport betting, as it were, before you engage, their risk, everything is defined, parameters is defined. You know how much you are risking, all right? Beyond even not even that one self, you know, once your game, as it were, didn't go in line from the beginning, you already know what you already know some of the outcomes. So it is the other gambling industry, as it were, it has some form of control before you engage. There are things you expect you to know. But trading, if you have $100, you want to risk your $400. Nobody's telling you to stop. What stops you at is when your trade hits SL. All right. So we have that luxury, and then in trading, you are dealing with some of the smartest people on earth. So, and you just want to take one trader to negate your direction before it's not going again. So there is really nothing to really do. It's not about you that is making the market not hitting profit, as it were. All right. You just need to know your edge. Your edge is anything that represents something that looks like a win potential for you. And these are what we are dealing with in our classes. And then trade with that expectation that anything can happen. And in a 10 series of trade, you just need 3. So long as your risk reward is 1 to 3, you are good. What that would mean, 3 wins will give you 9% total win, because 3 times 3 is 9. 7 loss will give you 7% loss. 9 minus 7, you're going to come up with 2% win. So this new week, I'm going to trade 10 times, for example, 2 times for every day, some days, whatever, 10 times max, an example. And I only need 3 of my trades to hit TP. How easy can that get? It gives me, if the first 3 hits TPs, I may just end for the week. I just need 3 TPs every week to give me 2%. 2% may be small if you are trading a $1,000 account, but imagine you're trading a $100,000 account, or you are trading several hundreds of $1,000s in account. That's how to think about this thing. Not your $10 account, you're looking for 2%. That's 2 cents, and then you are troubled that you're not making much. No, you must learn to compound and understand this from that standpoint. So this meeting is not supposed to be that lengthy. So today I just want to talk about one of the trading edge that you want to pay attention to, and any of these could easily be your model. For example, I very much prioritize what I call, to me, high probable setups are setups that, first of all, I know my directional bias. For example, I am bearish. I'm aware the bias is bearish, and you can do that for a couple of ways from the higher time frame, of course. Then in that's whatever, in the bearish bias, I now see what we call your sweep and breakup structure. All right. In the bearish market, you find a pattern like this sweep and breakup market structure. Now, trading 101, which is what you must all have seen in our course video, is that in a sell market, you only look to sell at what? Premium, right? And in the buy scenario, you only look to buy at discount. So in this, whatever, here to here, your premium would be somewhere around that area. This area would be your what? Equilibrium, for example. So your sell automatically should be anything in that area if you are in a bearish market, right? Now, being that you have seen this sweep and BOS here, that gives me a short-term bias that this area should be protected and the safest to put my stop loss. All right. So I can safely put my stop loss there and look to sell if price comes to my premium. Very simple, right? And it's actually simple. So, but for this entry model, I am not necessarily waiting for any liquidity for price to invalidate into that area. All right. All you need to sell from in this particular scenario is, most of the times you are going to see a wick here that was swept by this side. All right. And it can come from the bearish or can come from the bullish candle. It does not really matter. All you need to do is to extend that wick, all right, and expect price to come to it and sell off. So it gives you that shoulder head shoulder pattern. So you have again a sweep and a break right there. Usually in this area that was swept in a bearish market condition, you would see there is a bullish candle that was swept here. Sometimes if you have a wick there, take out the wick. If you have just the candle, no wick, mark out the green or bullish candle there and extend it. So usually price will come back to that area and your stop loss will be here and you sell off. This is your TP. This is your TP, and that is your L. This could easily give you 1 to 5, 1 to whatever, depending on how the market presents that. Do you understand that? Now, also, very closely related to this, and this works, is a high probability setup as well. You have studied where we talk about structural liquidity, being that is the second high after the main high in a bearish market. In a bullish market, is the second low after the main low. All right. So sometimes or most times you can have structural liquidity, the real structural liquidity after the sweep, break, price comes here, forms a structural liquidity and break again. All right. So in this particular example, you don't need to mark out this area, okay, and extend because you already have a structural liquidity. Now you can have other lows here, but the main low you want, the main high you want to sell from is that structural liquidity. And of course, your stop loss is still over there. And price usually at the time would spike to that structural liquidity, keep you in, and then sell off. All right. So I just gave you a picture of two things. The first one, there are no liquidity, it's just a sweep and a bullish. And then price returns back to the last bullish candle that was swept there and sold off. Why the other one? You have that bullish candle, but then price comes back, creates a structural liquidity. In fact, in this other example, you could easily have sold from that area. All right. It's like this first one. But if you didn't sell here, price will mostly sometimes come back and take that structural liquidity and go down. All right. Now, finally, in this, still in this, whatever we're doing, entry patterns, right? Entry patterns can also be, you have your sweep, your break, right? Now, sometimes this area where you want to market might be very fast. So you have your sweep above there and then break like this. So it's very far from the whatever. So it's not be ideal to market your sell there. All right. So in this scenario where the area that was swept is very far from the protected high, what you want to do, what will be your POI, would usually be the other block that led to this whole expansion. The other block right there. Mark it out. In this bearish market scenario, it will be a green candle. The last green candle right there to be visible. You see the green candle before the bearish movement. So that's a bearish order block, right? So sometimes price can give you structural here and take it out, spike from it to sell off. Now, the reason why this is very much valid is that this first area that we marked in the other ones and even this structural liquidity here, they will most likely, both of them most likely will be below your premium level. So you just know that this one, that one will not send price lower. Price will actually break them to the other block area, which should be at the premium area. So most of the time, so generally speaking, again, as I wrap this up, is Forex 101. If you're in a sell scenario, look to sell at premium. And then I just gave you a couple of entries which you may want to utilize at that area. So let's see a couple of forward. Now going forward, I will be, oh my god, I'll be doing more of forward test with us, right? So that it will be real, like as it were, assimilation. I was trying to do some test running with this GBP card. I don't trade this, but the pattern works everywhere. I will forward test, right, with another pair, say GBP CHF, because this should work anyway. But then let's look at a couple of reasons why this trade. Now you will have sanity knowing that you should only look to buy in a buy scenario at your discount, right? And sell at premium. Okay. Sell at premium. So let's look at a couple of things I marked out here. Now this is a clean sweep and break, right? Now, based on the pattern I gave you in a bullish scenario, what you will have is this. I'm missing this. Sweep, break, right? Usually, you can mark out that area that was swept and expect price to come take it out. In this pattern, you don't need any inducement or whatever. Okay, so let me zoom in so you see an example of what I'm trying to see. We'll see practical live examples sharp. But then what I mean is this. This was a clean sweep, rejection, and that broke. So usually you should be expecting, or based on what we talked about, yeah, my indicators. So you should be expecting that this low, you see that candle that was swept here, this black candle that was swept, you can actually expect that mark its wick, all right, extend it and expect very powerful bull movement from there, all right. That's the other pattern I was sharing with us. But then in this particular example, we see a sweep and a break nicely. So from your gauging, you can do this from your eye gauge. From this low all the way to that high, you can tell that this area is around the 50% level, and that's equilibrium. So your buy will actually be inside from that level to this low. So you look for a reason to buy here, all right? And in this example, this is more like a type 2. So you have your sweep. Now, before the break happened there, you have a little bit of liquidity here, all right? So extend that time. You can start buying from that liquidity or low taking out, or most of you may not. I'm actually trying to work on the concept. It's not my concept basically. You see this candle here, all right? That's last green candle. You go to smaller time frame. This candle is actually as an order block here. But this candle was what swept this, and after it, you see this expansion. So this candle is very important, okay? And if you extend, you see that the very first movement came once price touched it. All right. So you see this very candle there. Okay. Came to that other block and expanded. And this could actually be your 1 to 3. You are out, because if you are buying from that liquidity taking out and your stop loss is somewhere around that area, all right, this high taking out should be nice 1 to 3. But again, it came back to this area, all right, didn't take it out. Even if you took it out, that's why sometimes you don't move. When you do forward test, you see reason why you don't move stop loss too early, and then finally came, because this high here is actually your target. Okay, that's actually your overall TP. Okay, I will forward test with us a little bit, but I just need to show us a couple of things from the recent stuff. Okay, so let's continue. So I am currently looking for a buy on G card. Look at this last candle that was swept there and then broke powerfully. So I'm looking for this guy to come to this area and then buy up to that level. In fact, once it gets here, basically, I should be done. I think the reason I have that higher objective because of higher time frame narrative that showed me that we might most likely get to that level. But I'm still not clear with. So this is a typical example of the entry model I was trying to teach us today. So you have here, of course, if you know what you are doing based on our model type 1, right? You could have sold off from this level. Okay, so price came back, took this out and went down. But if you missed that, no problem. So this is your clear sweep and it came down, clearly broke structure. See what I did? I don't need to even know if there's any inducement here. Mark out that area, the last candle. You see, I marked the wick that was swept, extend it, and see price came back to it, took it out and sold off powerfully. So this is like your shoulder, head, shoulder sort of, but it still respects the whole idea. So what you see there is clearly you have a high, price swept it, comes down, breaks structure, and then you're already expecting that price to return back to that area there that was swept. Okay, expect to come there, and once it gets there, your stop loss will be at the top high there and comes down. Okay, so this is basically what happened here. All right, and this method or patterns always happen. Now this is the one that in this example, okay, oops. So look at this other buy model. Personally, and you can actually adopt this, okay? It's not a rule, but I feel when you have sweep, like you see here, and a break, the odds are highly in your favor, especially if you are in the right side of the market. That means you are bullish, for example, then you now see a sweep and a break in your structure is telling you bullish, and you see a sweep and break in line with structure, right? Man, that is a high probable trade. I would wait for that to play for me. So in the higher time frame narrative, this has changed to bullish, all right? And that's why you want to always get your structure from the higher time frame, say daily, weekly. And we'll do that one of these examples quickly. So you see a sweep and a break in line, powerful break. Although he didn't need to really take that in out. So that was actually a sweep there. All right. Then it started coming down. Now, of course, what we were doing still applies there. For example, if you followed us to study last time, this is actually in the bearish side, this is actually what we call our flip zone. Okay. Flip zones are areas where price break powerfully. Just notice those area price breaks powerfully. They are like your breaker blocks. So, all right. So you can see this powerful break and then you those wicks by the side. That's your flip zone. Once price come back to it, it's going to sell off from there. All right. But then this is if you want to counter trend. But let's follow the trend. And that's where you're going to have your high probable setup. Your sweep and break. Look at this candle that sponsored all this powerful. That's your other block candle. So you mark that out. That's your POI. That's your POI. But then price came back, didn't touch it, left us a liquidity and rally up. So this liquidity area here further validates that POI. I may not need this liquidity here for me to start buying from here. But then once I see it, it further strengthens that other block. The other block now is this black candle here, the bearish candle before the powerful bullish movement, right? And then you see price came close to the other block, didn't mitigate it. Mitigated means use it. So it has not been used. It's still fresh because this low did not come to it, right? And then it pulled and then came back, used this low as liquidity. Look at how it spiked it, rejected, came back. It shouldn't go below this rejection because this rejection actually is in the other block. And I've taught us how to evaluate wicks. So if you want to start buying, probably you weathered all these buys and then you started seeing all this scary sell where you want to buy from. Since you know that this other block should not be violated, of course, your stop loss is still here. All right, you can start looking for the 50% of this wick down and buy from, all right, which should be somewhere around here. And it's actually lower than that, basically higher than that. So it's bought from there. Now I want to give you a clue. Now let me show you something. If focus on this area, for example, focus on this area. Please mute your mic. Who is that person? We're not answering question here. Mute your mic. I don't want to be hearing distraction from the back end. Every mic should be muted. So focus on this area. That area is that quite big. So let's look at another area. Focus on this BOS. So after price did all it did here, the goal was to break that. So notice, pay attention to price. On its way to break that, price struggled a whole lot and then finally broke that structure. All right, finally broke that structure. Now, once this break of structure happened, what did you say again? Pulled back, did this, and told us of. So this whole area, price had left that area. Now, there are ways to know price if price leaves an area, and because he struggled in lots here, all right. So once he finally broke past it, please, I'm getting distracted now. Who is that person? So you must pay attention to price, right? You must pay attention to price. And so I believe you can see my screen. So price left this area, BOS here, formed this. And like we say, the formation of a low further validates the previous one. The only exception to this rule I just mentioned is when you have price forms this low like this, and then it's doing smaller movement before this BOS. Just know that all of these lows, this low is invalid, even though you have a low there. Do you understand that? So you have a clear BOS, pulls back, another BOS. So this low strengthens this one quite all right. So this low cannot, this is now your protected low, for example. So before this next low can become protected, you should have another clear BOS. But then you now have price comes and forms multiple lows there. All right. So long as there's no clear BOS, this low here is in trouble. So price can actually come back and take it out. All right. But if there is a clear BOS, so clear BOS, I mean, not a sweep, it must be a BOS. And some of us don't understand how to know BOS. All right. For example, look at this one we are trying to study here now. Okay. Look at this one we're trying to see here. All right. Compare this area that I just marked and this one here at the bottom. What's the difference? The first one, or this last one I just marked now, the BOS is strong, right? It is strong, and that's why you must pay attention to price. The BOS here is strong, so this low, you cannot head for it. It pulls back and then sweep. This is not a BOS, this is a sweep. It's a sweep. You see, it closed with a rejection. Closed with a rejection. So once that happens, just know this low is in trouble. So this low will not become valid. Even if after you see this thing, price comes and do another one, still suspect this low, because what led to its break was a sweep, not a BOS. All right. So, but then these are some of the little things that you just need to know, by the way. So that's why I expect that this guy will fail, and this should be protected. Actually, this stop loss is too big. If I want to buy from this, imagine this price swing, I will look to start buying from here and put my stop loss here, because this one stop whatever came from a nice whatever BOS. So you can expect that to happen, and that's your TP. So this really came close to it, but it didn't really break it. right? So these are some of the little things to know, difference between sweep and BOS. So you now have that, and again, you already know that when you have powerful breaks, like you see this break here of this, it's very powerful. You can see the candle that led to it, very powerful, right? What do you expect? You expect that becomes your breaker block entry. Okay, that's one of the things we taught in the channel. So can you see how your entries based on different analysis can be playing out? But in this case, this breaker, I would say it's what's mitigated immediately. So you see this couple of candles came back to it, right? Immediately. So this is where you want to buy from. And then if you're buying from here, this thing did not get broken immediately. So you can suspect that to fail. But then it came down and you can see what happened there. You can see that low got taken out. Assuming once this breaker was whatever was mitigated, price just broke that high very well. Then you can expect the next buy to form after a low is formed. Do you understand? So these are some of the logic. So you must trade with logic. Trade with logic, but you don't need to explain plenty things. I actually wanted to just show you that this thing that I just did. Okay. So some of the things you need to study is why in this case you had a valid breaker block. Someone was showing me breaker blocks. Why in this case you had a valid breaker block, and this case where you have powerful candles, this breaker did not hold. Why? These are some things you look at when you study on your own. I can tell you for a free, the reason for why the second one is not valid, a breaker block. Look at the way that BOS happened. Look at the way it happened. The candle that broke it closed with a rejection. Can you see it? The candle that broke it closed with a rejection. It was the next candle that came out powerfully. So price struggle. This showed you a struggle to break that. So that breaker did not break. All right. So that's why you see price came back to it here, pulled and failed as it were. Instead, it gave you a type 2, came to take out this liquidity here. Another way to know you are going to be buying from that level, again, understand your premium discount. If you take this whole push, sometimes that's what I like doing a lot, taking out the whole evaluation, right? Evaluating the whole thing, right? I will just know that, okay, I don't usually do this fib. I'm just thinking of teaching purpose. I don't know that this area is 50%, so I want to buy inside this area. So what will make me buy here? I can see there's an order block, but there is a liquidity because I know inside to want to claim a liquidity, all right? But even if I am buying from the order block, my stop loss will not be below it because this whole area is what? So what model am I seeing here? There's a sweep and whatever here. This black candle is the main order block that sponsored the move, all right? So that's your order block for the move. But then let's not veer off our purpose for tonight. So again, look at the next BOS. That structure got taken out here. You see, struggled, so there's no breaker, anything there. Instead, you can look at the low that was created before that structure gets broken, this low. That could be your next area to buy. And if you look at it, it makes sense. From this low to that BOS, this area should be my 50%. And what is there? Liquidity, right? And you see it formed, rallied, comes back, take it. So this is where you want to be buying from, all right? And in this case, I did not take this example, but if I'm buying from there, your TP would be that high. This high that was created in this pullback. If I am buying from this area, that area will be my TP overall. This is 1 hour time frame. Hope you know if you go to 5 minutes time, you can actually have multiple stuff there. Okay. Okay, so let's go back a little bit. Let me cut off. Let me take a pair I have not looked at. And let's see what we can do for the next this class is taking too much time. The next 10 minutes. Let's see. GBP. What now? CHF. These are pairs I don't even look at, but for the fun of study, right? You can actually go back to any of these pairs. So this is 1 hour time frame. Normally, if you want to be very effective in your back testing, right, is to basically know your bias. And if I'm going to be doing one time frame analysis, the results will not be as effective as if I do 1 hour and I go to 5 minutes. Do you understand? To get bias from 1 hour and I go to take 5-minute entry from 5 minutes. So that's something to consider. However, because time is fractal, we can actually get a couple of, can actually get results. Okay. But in real time, this is not how I trade. I don't trade with just one time frame. I use one bigger time frame to get bias and then the smaller one to get entry. So let's cut it from here. This random, so I don't even have idea of what I'm looking at. So let's cut it from there. So to trade futuristically, you want to look at where price is coming from. The flow of the water is bearish, right? You see it from here. And then we tried to push up to that level, and obviously it reacted off something from that area. Okay, basically so this works. Push, pull back, push. So bearish, right? However, we can clearly see that there's been a BOS here in the overall bearish trend. So once I see this happen, it's already signaling for me that we always are going to have a pullback. Then we might have a change of structure. So in this whole whatever, it is this high I want to see price break, not sweep, for me to know that we are changed to bullish. So it's what I just did in this 1 hour whatever. So if I was trading from just 1 hour, I'll just go to 5 minutes and start looking for. Now, another thing I want to also see from here is that from this high to this BOS here is, of course, a price swing, right? And then from high to low, I can predict that area is my equilibrium. So my next sell should actually be around that area. Giving, you understand how that is so, right? And clearly that is a very big fair value gap, but we're not trading off fair value gap, but I'm just doing quick analysis for you to see how I would be thinking about this. All right. And then, so if there's anything I want to engage, and I want to engage in a quick buy to that area there, I am bearish, but you can also engage in a buy counter trend. Now, immediately I can see this is not magic. You can clearly see a sweep here. And a break. And a break. Because I have a short-term bullish bias, I would love to buy from here. And this clearly is an order block, right? Of course, the other entry model I showed us is here. Shoulder head and shoulder to the other side. Some people call it QMR, Cosimado. So whichever, these two area forms what you can call a POI, okay? And if I was still cutting price from this area, as when price had not gotten to that place, I will actually, okay, there's no reason for me to even come to this area. Can you see there's a liquidity here? Okay, liquidity there, and that validates why I want to buy from the other block. So my entry would actually be from the other block, and extend it below. And I like doing 1 to 3. If it will not give me a potential of 1 to 3, of course, it is quite huge because we are in a 1 hour time frame, right? But if I go to 5 minutes smaller time, which I may not be able to do because of the I don't know how this replay functions here at the moment, but then I want to pay attention to this other block there because we are bearish, so price can actually drop, actually the liquidity below whatever. So that area is of concern to me. Okay, price can just get there and drop. All right. So once price takes out the other block and reacts, the liquidity reacts off my other block, I am buying there. You see, I am in the trade. Okay. I want to see that liquidity taking up, but my entry, not real, is at this other block. But it's used that as an inducement because I cannot be buying there now. From this whatever to the high, this is at most equilibrium. I want to buy at discount. That's why I'm buying here. My stop loss is here. So until this gets taken out, I'm not out. Again, it's not whether I'm going to be right or wrong. Don't forget the rule. Your entries, your whatever should be flexible. Your expectation should be, your rule should be flexible. Expectation, entry rule should be fixed. Yeah, I'm tired actually. Expectation should be flexible. So let's see what happens. Boom. See that now, TP. In this case, I was wary of that other block. In most cases, not because this one got TPs, you now think, okay, I will not be, no. Because you are overall bearish, you want to be careful with counter trend. In fact, price does not have to get to that area I marked out before it start dropping. It can take off this area now it has taken out now. I want to see how price be. If price give me a sweep and break of structure here, I will sell because I am bearish. So in your journal, you can screenshot this kind of thing and say, okay, so how did I get in on this trade? Are you seeing the logic? You journal it. If you can see it tomorrow and you take it with confidence, okay? Take it with confidence. And that's what this thing does to you. This, I've not even come here to look at this paper. It's the same thing all over any pair. So remember, we are looking at, so if price comes to that top side, where would I want to really sell from? Where would I want to sell from? Am I seeing anything there? Really, that's a clean break. So let me take it out. Let's get a specific area. This is a very clean break. All right. So any of these breaker block can work. But let me mark out that one, that black candle, extend it. Okay. Let me have a projection. That's a breaker block for sale. And it's looking very valid because you have other block, liquidity / other block just. So they can use those areas inducement and sell off from that. So what I'm going to do, I'm going to extend it. Okay. One thing to know is that recent price action is more powerful than old price action. But sometimes you can use them as reference points. Okay. So let's see. Let's play and see. This BOS, how did it happen? Price broke and it's rejecting. Let me not waste our time, John. Let's see. Let's just play. So if I am still bullish, where would I want to buy from? In all honesty, this break is very powerful. So this area, this breaker block is where I'm going to look to buy from that week. And that will mean this small liquidity here be used as, what's it called? Inducement. So if I'm going to get another buy to be around that breaker, close for the whatever there and aim for that high is 2.93. So can you see what I'm doing now? I notice my stop loss covers below this. Can you see that fair value gap in the candle? Can you see this where this candle end? Notice my stop loss should cover for it. Price can actually come to every closes or whatever and then drop. Okay, so you must pay attention to that. But I'm not confident about this trade because it's a counter trend as well. But then let's see. Maybe I might even see reason to even short. All right, come down. To follow the trend. Remember, we are bearish. If I'd want to sell, this could have been a good point to sell from. But the reason I'm not going to sell from here is because the narrative behind this sell is not whole. This is a low liquidity run. Why? There is no sweep. Did you say a sweep there? So these are trades that will make you hit stop loss like 50 times out of 50. I'm kidding though. Okay, so the strongest of trades should have narratives of a sweep and a break. And then if it gives me that and comes, I'll take it because it has a sweep and a break. But this one does not sweep anything. It just came down from, and so I am not interested. It may work, but I'm not interested because I am looking for bearish area. Okay. I am still looking if I'm going to see a sweep and break. Yeah. The break is not a clean break, it's a rejection. So you want to be careful, conscious of how these breaks happen. You see, that's not a break, that's also a sweep. Okay. So we have left that area. Left that area. Now we are at POIs. That line being inducement and this area being flip zone or breaker block. So let's see if we're going to have. So because price comes to one of the things about breaker block entries many times, I don't just want to, especially from the item, I want to see clean. You can call it confirmation entry, a sweep and a break and an entry, just like the way we entered the one below. I remember we are still bearish, so this is messy. This price action is messy. So I want to see a clean break. It's plain there. Good. Good, good. Can you see? Can you see what's happened? So this area, if I was selling from this liquidity and my stop loss is above that, I would have been in profit. All right. But because we're not looking very far behind, you can clearly see a sweep and a break in direction of price action. So what would be my entry model here? I would have wanted to come all the way up, but I don't see price going there because the damage has been done. So once damage has been done with clean breaks like this, you want to consider breaker block entry. Now, there are times you can have multiple POs, which is fine. If price comes and takes me out, my stop loss will not be above. You know, if I put my stop loss very high, okay, my stop loss will be around that area. But if that fails, that other POI will be considered. Of course, there's other block there, so that's a very powerful point as well. So I have 2 points I have marked at, and it's not wrong sometimes to have that area, okay? And then this high should go. Of course, you see a very more cleaner BOS. So it's confirmed that we are bearish, continue the trend. And overall, because of where we are coming from, this thing, no matter how long it takes, should come and take out this low here. So if we get an entry, you can swing this boy down. Okay, so I have marked areas I expect to sell from and area we expect to exit from. So those are the things that forms your trade. So let's play and see. I am not in yet. Once price get there, I'm selling. I am selling. I have sold. Sell from here. You see that now? Took this out, that area. I am selling from here. And once these breaks happens, the chances that you're going to take out that sell is very slim. But you don't rule it out, right? Because the break here is very, it's not persuasive. You want to see clean breaks like this. It's not persuasive. So that high can still be another entry. So I'm not breaking even or moving stop loss just yet to any level. Okay, so you may put that. Remember, our stop loss is still there. Overall, we are in the trade. Is that the area? From smaller time for you get very smaller and more precise risk to reward. So for here is 1.45. And it's looking to me that this area will still go. I already marked it out. So that can be another sell area. The only reason that that area gets protected is when this happens. This BOS has happened. So I don't expect price to get all the way to that area again. You see, it didn't get there again. You see that? Do you get what I just explained now? I've not been here, or this is just real what I will be looking at the market. And you will get this mastery by practicing. So remember I said that's where I want to sell from when price was here. But the only reason why I will not sell there is when price breaks this area very well. You see that once this area gets broken cleanly, that area becomes protected. So I can move my stop loss now. So these are some of these you practice. You now cannot move your stop loss because that area becomes covered. And then if you miss the first sell from that area, where would you want to sell from again? You see this liquidity here, right? That area, I want to look to sell there. Why? The reason is simple. It will not be from this high to this low. This place is my 50%, and I want to sell at premium. This is very noisy. So this area, in fact, from this area, I should start selling from, but I wouldn't sell from because these are a discount. I don't sell at discount. So you see, that's why this one got taken and then it got taken out again. Okay, so I want to look my real sell from that area. And then you see what happened. Boom. Once this area gets taken out, that low gets taken out again on that BOS, that further tells you, and then you see on that thing form here, this could be your next sell area. All right, that could be your next sell area. So that would mean you can actually now start moving your stop loss from where you were if you got in on the first trade. So you can move stop loss here and allow trade to play till TP. Do you understand? So these are you scale. These are you scale. I'm very tired though. I still have some other study to do, and I'm really liking this session. Not because I'm eating TP, because price is shrinking. You can see clean break. Clean break. Until price get to terminus. Okay, let me show you something. The moment this broke or called, that area becomes invalid. Price will no longer get there again because it has broken. So this becomes your new area. And in this area, I'm going to be looking out for this midpoint to sell from. Okay. But the moment this one now breaks again, that initial whatever gets invalidated. Instead, I will look to sell from this area, and I will not start selling here because this is still below. I want to really sell from that breaker block that week. So I want to see price take out this high. And you see we're very close to our terminus. Terminus, what am I saying? I want to see price take out that high and react from that zone, flip zone. Unless the only what will negate it is if price breaks the low aggressively. Bam. TP overall. Okay, quiet is okay. Overall, we are there. Are you seeing it now? 1.4, 1 to 4 points, whatever, achieved. So can you see how we took buys to the upside and then took sales and could have scaled in to the downside? Now, this is a swing. Swing has occurred. Okay? Now, once this happened, which it has happened, you can now expect that price will pull back. All right? Pull back. And if it pulls back, in my mind, it should pull back to negate some of all of these highs that has been formed. All right? And from this high to this low is a swing. It should pull back to at least 50% of the level around that area. In my mind, from expertise, I can tell you that area should be a good area to, if the trend is still bearish, then it should pull back to that, at least that level and above, and continue the next sell. All right. If it is bullish, it should break it and break this high. I'm going to clean my chart. It's coming too rough. So that becomes, let me clean that. This high now becomes a very key point that price needs to break, not sweep, for you to know that trend has changed fully to bullish. But other than that, you are in a dicey, what you can call no man's land. Sorry, I'm very, very exhausted. You're in a no man's land at the moment. So price can keep on being bearish. All right. Because we are overall bearish, I will look for bearish trade. Right. And so let's look for it. You have a sweep here and a break here. A return back to that and sold off. So really, this low should fail. Right. And then let's see what now happens after that. So I want to see a sweep and break. If I see sweep and break to bullish direction, I will buy. Sweep and break to bearish direction, I will sell. Do you understand that? So let's see what happens. Boom. Okay. Okay. No break. Okay, we have an up break to the upside. This is not a clean movement, but really, in real life, I will take it. A sweep. Let me clean this. Taking that out. A sweep, and there's a break here. Okay. in real life, I will take this, or in real time, I should say. So, and I can clearly see liquidity here. And order block. So really, I would love to take this. Again, it's not whether TP, it's either TP or SL, right? So I have my SL cover for that low. TP 1 to 3. That's 3.5, but then should be aiming for this high because I am bearish, so I shouldn't over expect much reward. The only reason again I will start looking for real full-time bull movement is when price breaks that high. That's one there. So keep an eye on that. Okay, so let's see what happens. Oops. The moment price takes out your suspected liquidity, TP, without getting you in, that trade is invalid. So I don't want to know whether price will come back to it or not. As long as TP area was invalidated, the trade becomes invalid. And I kind of like the way it broke that area. So it means I told you that they will be clearing, looking to close because they have hit that whatever. So they'll be looking to take out some of the guys that were swing. That's why swing trading, it takes a lot of work. Okay, it takes a lot of work to really be a swing trader. So you're going to be swinging. You don't have to be looking at your chart. Imagine you have entered profit all the way here and only to come back and see all this pullback. I can't really. So I have accounts for that one. I don't really take my swing trading account seriously. I just leave it for monthly and weekly time. Let it just be melting and boozing as it were. So that area is very important to us. So it clearly told us or showed us that we are short-term bullish, right? And look at what I'm showing. Because of this sweep there and break, you see this structural liquidity is a very important liquidity point. If I was looking at this trade, because I am bearish, I would actually be looking to sell from this area. But it's not really a high pro because price is giving me very strong bullish vibe. But sometimes, even if it's not a high pro trade, you may want to take it for your 1 to 3 purpose. So I just marked out some things and sell from the liquidity area. No, that's the other block that I'll sell from. You see that green candle? So let me put it right there. The other block there, and stop loss just covers for that high. And just look for 1 to 3. So sell gets triggered, but even if you missed it at that level of that area, you see this pullback here. Look at this first candle. This pullback gets to 50% of it. So you see that's how you scale in on trades. If I want to probably scale in more, this current candle now, 50% of it will be around here. So you may expect another sell from that area. Should it go to a direction, you can just whip it into a sell, but no problem. You see it now, triggered. Can you see? Can you see that? You see how this candle came into that 50%. That's how you trade. All right. Sometimes it may give you, especially when the wick is big, not like this one. Like this is a small wick, so you're not concerned with this one. You're concerned with the long wicks, especially when it comes to PO. I hope you are learning something and you are documenting. When you start doing your own replay, you see none of that. I've not come this GPC chef. I don't trade it. But if what we are learning is true, then it should be true everywhere. So this candle is huge. So this candle comes in, takes in 50%. Our next entry should be this candle, 50% of it. That's how we got. Now, once this one got triggered, this candle's wick is not very big. Notice we consider wicks of candles where the wick is at least 60%, the body is 40%. In this first one, the wick is like 70%. This second one, wick is like 60%, body is 40%. In this one, wick is like 20%, body is 80%. Hope consider logic. And then on and on. All the other ones have lower wick, bigger body. You don't consider them, right? So you see our 1 to 3 in this case. You can call it lock, but it got triggered. And profit Remember, we missed a buy, but we took a sell based on why did we have an entry there? Look at the back. First of all, we expect some bearish movement when you come to 50% of this range. And if you look that high to this low, it should be 50%. So anything inside this, whatever, is good for me to look for sell. And once I start looking at that area, what I can see from this area is that there was a sweep here and a break here. And then you have a structural liquidity here. Then you have an order block. So that order block is my entry. Bam. And then everything. Hope you understand that. But you don't have to look for that. Those are just, I'm using based on professionalism too. So what am I looking for again? The way that candle broke this area, it was impulsive. So you can think of a breaker block. But I won't consider breaker block because remember, we have something like an unfinished business. So you saw this low here. They will just have to go fail for me. Right? So you see this relatively equal lows or this one. So they might give you a buy entry here. Maybe, but I won't take because it missed my entry. So let's see what happens. Let's see how price plays. My time is up. Okay, in this case, it reacted off the breaker block. Right? Clearly. Right? So this could have been a missed trade. You see that breaker block, impulsive, it held rather. So my instinct was wrong here. It's fine. I did not enter. And then you see how it went up and broke this. All right. Nice. So it seems to me that they are going to change direction to bull because that is looking like a target already.
The best trades occur after the masses have been.
I don't know if Mr. Kinsande is here. Looking at so now you see another BOS here. Okay, how was it broken cleanly, right? And then it pulled back. So I would have wanted to, my instinct is telling me that this area should be taken out for the next buy. All right, so but normally this broke that. So this area should, if assuming this broke it, this next break was clean. If that next break was clean, then this area would be your target. But it's looking like a rejection. If it's a rejection, then boom, this guy should fail. And then you want to buy from that mitigation block area. Okay. These are a whole other block. But again, that candle break was impulsive. So that could be your next buy. So let's see. Unless the only thing that will break is when that candle's high gets taken out powerfully, which eventually happened. So while I was waiting for price to get here, it didn't. It just took out this one. You see that and broke very well. This break was powerful. So that is a breaker block, but was mitigated immediately. So this could have been a short-term quick buy for me. All right. Once you see very powerful break, don't wait for anything. Wait for price to pull back to that area and buy from there if you are sure of what you are doing. I will say if it's sure for you, run them. Sure for you, run them. Once you see, just engage. Sometimes it can happen immediately. All these other breaker we have seen, it took time to come back. But this one, if it breaks powerfully, wait for price to come. Just pick it. You see my stop loss, I put it below this other candle. So because it can actually play inside that range. And then boom, that's a quick buy for us. So once this happened, and again, we're looking for that blue area as a change of trend, right? So what has happened? In the overall scheme of things, we have seen a general sweep there and a break of structure there. So we are now bullish. All right, we're now bullish. So I will now be looking for buys and trade it with full confidence. So 3 more trades, please. 3 more trades. I'm very tired. I'm almost past 10. So let's see. Good. Now, how would we change trend back to the downside? It's not just any low gets taken out. It's when this main low goes. So you see how we change trend that we say we have changed. So these are the things you must know and you must remind yourself. Sorry, please. But these are the things you must know and remind yourself. And then in a swing, this is a whole swing, right? 50% of that swing should be where you want to really see buy from. And my instinct is telling me this breaker block that we did not mitigate. Okay, we mitigated that, but that area should be a good area to buy from. All right. Remember, trend has changed. So all of this pullback shouldn't scare you. But if you know what you are doing, just like when we confirm direction, you can actually look for sales from that whatever all the way to 50% level. But then let's only wait for our buys. And if you are buying, once your buys get triggered, that high there is your new high that price needs to break. I'm not buying yet because it's not in 50% level, right? Based on the entire swing, this area I'm looking at for. So pay attention to that area. So price is just playing, and if there's anything, I'll be looking for sales. But only that will mitigate my expectation is when price just jumps, like what is happening now. You see that jump? You see those jumps? I don't need to wait for 50% level again because the overall trend is bullish now. So any clean break of structure to the direction of the trend should trigger my action. So we have missed a couple of trades, but then it's fine. You see this other block here? I'm looking for that other block and this to be taken out as my next buy zone. Boom. I could have had a stop loss right there, hit. Okay. So for every stop loss, you ask what technically happened. Now notice after this rally, you notice it didn't break there, it just swept. So and every sweep is a failure swing. And that would mean price will go back and take the low that created that failure swing. So you see this low here that rallied to create this failure swing should fail, right? So it's looking like, not looking like, this actually is where the real buy will happen from. But I'm not comfortable with this trade, and you can tell why. There are no clean-cut sweep and break unless you want to lick it from this area. That's a little bit of sweep, and eventually that's the break. Okay, and if that's the case, which it's looking like the only sweep and break, the real buy would actually be this other block here. So let's see. That's my instinct anyways. So in real time, that's what I'll be looking for. Can actually still come down there. Boom. We are out of the woods, right? So can you see what happened? Can you see what happened? In real time, that's liquidity here. Didn't really take it out, and I wouldn't have entered the trade because I want to see it bounce off the other block, which did it. So a missed trade. That's one. Two more. Can actually still come back and really test the other block. It's possible, which just happened. So I may actually now be in this buy and taking an L, stop loss. I am still not bearish. And you know the reason for that. So price at this moment is in a no man's land, if you like. From that high, which has not been broken, to this low is a swing. So all of these pullbacks, remember we have this tentative area, okay, that looked more like a midpoint to me. Let's keep going and see. Now, in as much as we are bullish, what I would have done, having taken an L here, is to analyze, reanalyze, right? We have a high that has not been taken out and a low that has not been taken out, right? And then, but in the intermediate term, price is looking bearish, right? So you see a sweep there and a break here. So I'll now be looking for reasons to sell here inside this. And that could have been a good sell after the sweep and break, right? And we have another break here. Usually when I take 2 L's, then I want to reanalyze based on the intermediate term. And these are some of the things you learn, right? I've taken 2L virtually in my mind right now, looking at the bulls. Then I want to look for reasons why I could have participated in this short-term sell. Remember, we have the overall swing structure at the bottom here. All right. And did I mark out a POI here that hasn't been mitigated? Yes, I think I did. So these are some of the reasons why sometimes, oops, let me take out this other block. So I can be looking to get a short-term buy at that other block. But then meanwhile, you have been so good to me. That could be a good sell point. How you love me. Okay. Can you see that? So in real time, I've seen a BOS. I see a swing or a rejection that swept a high here. So I know that high should not fail basically. So this is like a sweep and a break. So price will return back to this area. So it can be two, the entry can be two form, right? That one I told you about when we started, we should be that area there. But the first one that jumped right on in my eyes was the middle of this area, which is this point. So I would have really taken a sell at 50%, stop loss above, and this could have given me a nice 1 to 5, if not 6. All right, so I would have really put my stop loss just above that high, and then target for the low that was created. And this is 1 to 8. So imagine I've taken 2L before coming, and I just see this thing. I just did it quick re-strategizing 1 to 8, and I'm balling. So let me see how price reacts when it gets to that other block. Okay, good. So you see, it got here. If I was a risk, not if I'm not being conservative, I can start buying here. But if I want to be conservative, because it's another block, you can easily take this sweep, this candle that swept this as a sweep, and then this as a break. Okay, go to smaller time frame, you will see reason to enter this quick trade here. This is another block now in the 1 hour, and this is a liquidity, 2 relatively equal low there. How you love me, you have been so good. So this one will basically be quite here, and I'll just look for a quick 1 to 3. It will not be quick. In the smaller time frame, trust me, smaller time frame, you will quickly get out of this trade. All right, so quickly I've gotten out of this trade. Remember, this is us being conservative. Ah, shit. This guy didn't trigger us in. Just went straight to TP. Well, no problem. Sometimes you miss some trades. If the bull will still continue, this way I want to buy. My next buy will be here. Unless that high that was created gets taken out immediately. Because this buy here, no low covers it. No lows covers it. So I would have be buying now. And SL gets hit. So why would I buy here? This area would have been my new buys. But then SL. So let's see what price will do once it comes to this ultimate low at the bottom here. That's what it will do once it gets there. Will it change back to being bearish? Because we have been selling for weeks now, right? So will price change back being bearish? So let's see. So till then, any sweep and break may interest me because I am still of the opinion we are still bullish. So this is a sweep and that is a break. This trade already happened. It came back to the other block, but I wouldn't have taken this though. Okay, look at why it didn't come all the way down. Look at this smaller sweep and break. So it has done the damage here, so you wouldn't need to come back here. So it just reacted off the other block there, and that is a trade. You see another dimension or another dynamics to this. So because I am overall bullish, this has been a really great deep pullback, right? So I will now be looking for anything that will support bullish movement. That's what I'll be looking for. Anything that support bullish movement. So I'll be looking for. This other block, this area here, didn't take it out. So fine, it has gone. Fair value gap there. I'm not concerned with this other block bottom. I want to buy here. It has BOS to this area. So it shouldn't really take that low because of this new low that is formed. So this low should be my entry. I could have taken an L there though. But once I take 2L, reanalyze. Oh my God, what am I doing? Reanalyze. And what I could have seen is this entire swing that BOS this guy. And 50% is around this area. So this is the new buy at my discount. And that's why when price got there, it just BOS to the upside. So you can see a sweep and break there. You don't need to mark it as. You can see the sweep, you can see the break there. So if I want to buy and recover all my loss, I should be looking to swing. In fact, this trade should swing me to this area. So let's wrap up here. Hope this has been an insightful time, even though I've been the one just talking. So let's see how I can participate there. This low price came 50% and it's currently there. So if I thought that would be my buys. And your SL covers that area. And the target was that 1 to 4 should we get filled in. It didn't come all the way down, but then why? Again, another entry, 50% of this week is here. So in your mind, you missed it, but actually there are things I will see in smaller time that will make me get it. I see, boom, clean trade to the upside. So in my mind, we are resuming the uptrend, and because we are resuming the uptrend, you see that high that did not fail, that the whatever price has really retraced down to take or grab a lot of liquidity, and they are going to take that high out. So I will only look for buys or things that, can you see how this thing can be easy? Just know your major swing. And that's what we've been following. And if you follow these things, you're actually going to be seeing how this works. All right. Just follow your main swing. You see how we didn't say we have changed to bearish because of all this pullback. All right. Because this our low hasn't been taken out yet. So all these things we pull back, and it pulled back all the way to this structural liquidity here, which is the next low after the main low. They started buying from there. All right. My chart is so messed up now. Started buying from there. The same thing now pulled back. We didn't say we have changed to bearish because of this pullback. Why? Because in this context now, this new low now becomes our very important low, even though we are still looking at this one. Because this one can still fit. As long as this one is still resting, we are still bullish. So pullback was to 50% area here. So the Forex 101, know your premium and discount. Hope you are learning that. And then we are now looking at, if I want to buy, I could have taken a buy to this area first, and now we are targeting that area because we are still bullish. So let's just play and see what happens. I'm tired. Can't continue. Pull back our opportunities. Let's go now. Why are you slow? Is it for me to talk? Now high should go. pull back into the range, into this other block here. Now we wanted that low to fail. Pullback was to fail these fair values, break. This drop was to take out something there. The more you learn, you start seeing this thing. You don't need to release zoom, but then it is what it is. It has taken liquidity here, and that's the expansion. Now that high should actually be the next target. It's taking so long. Should I take it by 10? Struggling to take out that high. So at this point, you may get tired of holding, and sometimes you break even and wait for opportunities. Okay, so eventually this low had been taken out. No matter what has been happening, don't forget the big picture, right? The big picture will always help you. That picture is that we have another block there. So all of this play. And then I'm even tipping that the low of that other block should go, basically. Okay, because it has stayed too much here. I think that low should go. Remember, we are still aiming for that high. So you see all of the plays at the bottom. Boom, took it out. Remember, we're still confirming, waiting for a confirmation of our uptrend. You see, once it came out of this place, you can see the speed. So this could have been areas where you get tired of holding the trade, right? See this pullback now. It was just to fake people to think it's all over. Pullbacks are opportunities. Look at this one that is happening now. Remember, we have a high there. It will go and take it, but then it has to come down. And from a very clear eye view, that's the area. If it should come lower, I shouldn't see that area I just marked that. Still pull back to take this out. Once it breaks that high created, it's not coming back to the area I marked. Once it breaks, it's not coming down again. You should just take out that high and confirm the uptrend. And boom. Remember I said if you swung this guy from there, you could have been buying. Oops. (1:9). And you could have held this for only God knows how long. So do you have the mind? Do you have the guts to swing this way? So my friends, this is where we're going to. So I said it's going to be a quick class. This is 10:30. Rich guys are sleeping. Family people have gone to their family. I will not blame anybody that left the call. No problem. I will drop the recording. But then it's a very long class, and I believe it's worth it. So I don't know if you have any question. Who has a question? Something is here. I am ending this year, but personally, I'm not done. Okay, I will probably take a rest and I'll be back up to analyze what I want to trade for the week. Just GBP, USD, and gold, and I'm good. Okay, so you saw how we started by getting your swing, your structure, and then you start looking for liquidity and entry. Okay, I'm not looking at any forecasting for the week for now. Please go and use what we've studied to do your own practice. I believe those of you who joined us for probably the first time, begin 18 or 2, not as much, number have reduced. All right, if you have a question, send them to the group. I will respond. Let's call it a wrap for now. Thank you all for joining, and please go do the work and make some money and come and pay tight. All right, guys, good night. You can exit.